So they're going to use that as an excuse as well for the second wave of inflation that we've been talking about. Friday, January 12th, 2024, Maneco 64, home of alternative economics and contrarian views. Gerald Celente has an old saying, and it goes like this: when all else fails, they take you to war. And I think, unfortunately, we are in such a situation. Yesterday, we saw the CPI data rebound. We're seeing the banks in trouble. We've seen the BTFP rise another 6 billion. Number was published last night, Thursday. We've got the bank earnings today. And lo and behold, the US and the UK have started bombing the rebels in Yemen. And that's not going to help the situation, of course, in the Middle East. And that's what we're going to look at today. And we're going to look at the price of oil as well. The technical picture is pointing to a lot higher prices. And I guess it coincides with this Mideast crisis that is really becoming more and more of a problem. It looks like it could spread, so to speak, and get a lot worse. Before we go deeper into the topic, I just wanted to ask you, if you haven't yet, to make sure you subscribe if you've been watching my videos and you enjoy them. And also to make sure you hit the little notification bell so you're notified of all my new videos, which are very regular, daily, I would say, with some rare exceptions. The other thing I would say as well is that if you're sitting on the fence still, or you're looking to add on to your gold and silver stack, check out my affiliates below. They're all very reputable dealers. And the reason I have more than one is because I'm in the UK. My affiliate here is Gold Investments. They have some good deals there as well if you're looking to buy gold and silver. And in the US, I have a couple, Miles Franklin and ITM Trading. And of course, the reason I have these affiliates is because in the past, I've always spoken about how gold has performed very well for me in terms of being a way of storing purchasing power in a world of fiat currency, of debasement of the currency. And I'll give you a few anecdotal evidences, not that you need it. You can see how your dollar or your pound or your euro or your Swiss franc is not buying as much as it used to. But I think I told you a few days ago that Rudy, his groomer, he has a mobile groomer. She comes every 2 months. That price has risen, not that much, but it has. I got an email the other day from Butternut Box, which are the people that provide his food. They come every 5 weeks or so, and they're really good food. They're food that humans would eat, and you freeze them, and then when you need to open it, you take them out and you let the packaging thaw down, and you feed them. But I got an email the other day saying that the prices are going to go up by almost 8%. So yes, gold and silver, especially gold, they protect your purchasing power in a world of fiat currency, because as Voltaire said once, fiat currency always go to zero. But back to the geopolitical and economic and financial situation. So yesterday we saw the CPI numbers. The headline CPI was expected to rise from a growth of 3.1% a year to 3.2, and it rose to 3.4. I think the core number also came out higher than expected. And from those numbers, I would have expected bond yields to rise, but they didn't. And that seems to be kind of a problem, I would say. It tells me that the markets and investors think the economy is not in good shape. And I was surprised yesterday that the 2-year note yield dropped by 12 basis points to around 425, and the 10-year dropped 6, which is half the drop, to around 397. So the curve steepened, and it's still inverted, but I think what we're going to look for here is for when that curve gets back to zero, the spread between the 2 and the 10. And that means that a recession is very near. So I think that's a problem there. The shorter term bills, they didn't really move. And that tells me that rates are going to stay pretty much where they are for the next 6 months or so. And they have a problem. And that's why Gerald Salente's dictum about when everything else fails, they take you to war is applicable. And the problem is that the economy is slowing down. We saw the other day, last week, that they revised down non-farm payroll from beginning of 2023 to November by almost 450,000, revised it lower because they always come out with numbers that are inflated so that the markets and investors react well. And then in the next month, when no one's looking, they revise the previous month. We're seeing all kinds of debt, credit card debt go up, national debt go up. People struggling, unless you're in the top 1% or even maybe, let's say, the top 10 upper middle class, you're not doing well, you're struggling. Credit card rates are going up. Yes, mortgage rates have come off a little bit. And the other problem brewing, of course, is in the banks. Not just the big banks, of which we're going to see a lot of earnings come out today. So I'll tell you what's coming out today. We've got J.P. Morgan, Bank of America, Wells Fargo, BlackRock, Citigroup, Bank of New York, Mellon. So quite a few of the big Wall Street banks' results are coming out, but also in the regional smaller banks whose assets are almost like, very focused on commercial real estate. And commercial real estate, we know, is in the doldrums. It's actually in really bad shape. So things are getting bad. Prices are sticky. They're not going down. And the Fed, I think, would like to cut rates, but they can't. So what do you do to take people's attention away from the problems they've created economically and financially? Well, you start a conflict. You start bombing another country. And I think this is going to... Yeah, this is not that last we're going to hear from this. Iran is going to get involved, I think, now. I might be wrong. And plus, we've got the election in Taiwan tomorrow. And I saw that President Biden said he's going to send someone to Taiwan after the election. I don't think the Chinese are going to see that as a good sign either. So things are really brewing there, and geopolitically, I mean. And here's the story about the strikes, and I'm taking this from the Financial Times. It says U.S. and U.K. launched strikes against Houthi rebels in Yemen. Joe Biden, I wonder if it's really Joe Biden, but anyway, Joe Biden authorizes military action against Iran-backed militia attacking ships in the Red Sea. Well, you might argue, well, they're disrupting the merchant vessels going through the Red Sea en route to the canal. We need to do something about it. Yes, I guess. But I think the problem is a deeper problem. We have to go back to Israel and Hamas. That's what the problem is. The Houthis wouldn't be doing this, and I'm not like excusing them, if that conflict had not been allowed to continue to escalate Anyway, back to the article. It says the US and UK have carried out military strikes against Iran-backed Houthi rebels, raising fears of a broader escalation of the conflict in the region. So this is not me being like a gloom and doomer. This is the FT. US President Joe Biden said he ordered the strikes in response to unprecedented attacks by the Yemen-based militants on commercial ships in the Red Sea. Australia, Bahrain, Canada, and the Netherlands also supported the operation. And the Prime Minister of the UK said the following, and I thought this was interesting. He said the attacks were disrupting trade, driving up commodity prices, and exacerbating the humanitarian crisis in Yemen. So the trade that goes through there, through the Red Sea, through the canal, is supposed to make up about 15% of total world trade. Yes, it is disruptive if you have to go around the Cape of Good Hope, around South Africa. It's a longer trip. It's more costly because you have to use more fuel. It will drive prices higher. But I don't think the prices had been driving higher, so have been driven that much higher. They will be driven higher, of course, now, in my opinion, if this conflict escalates. But what I think he's trying to cover himself here is the fact that prices were going to go up anyway, no matter what. So he's using this as a cover. He's setting up, he's putting it out there. It's like a predictive programming from the Prime Minister of the UK. So they're going to use that as an excuse as well for the second wave of inflation that we've been talking about. Because inflation, as most of you know by now, is not the CPI. CPI is just a measure of prices. The inflation has been created since 1971, technically, when Nixon closed the gold window. And the inflation of the currency and credit have resulted in exorbitant, unsustainable amount of not just national debt, but corporate debt, local government debt, and personal debt. And that's where we are right now. And they need a huge crisis. And I was afraid, I have been afraid, not really afraid, but as a matter of speaking, that something big would come up because things are just not sustainable. All the debt, all the refinancing at higher interest rates are coming to a head. And this could be the crisis here. Some people have argued it could be a cyber pandemic, but we'll have to see. So I think it's very serious. And when we look at the markets, we're going to look at the oil price and why I think it's pointing to a lot higher prices, the technical picture. And someone might say, well, that's because of the war. But even if there hadn't been a war, or some escalation of this conflict, the technical picture still looks good. Something else would have driven the price higher. So it's 8:45 a.m. London time. We've got spot gold at 2,038. It's up just under $10. The high's been 2,040 and the low 2,027. We've got silver up 18 cents, trading at 22.92. The high's been 23 exactly, and the low's been 72. The Dow futures is up 40 points. NASDAQ is down 14. S&P is virtually unchanged. To the currencies, sterling is up slightly at 127.64. The euro's unchanged, 109.70. The dollar's down 0.2 versus the yen at 145.04. And the dollar's up slightly versus the Swiss franc at 85.26. Dollar's down slightly versus the yuan at 17.20. The Aussie dollar, that's up 0.25%, just above 67. The dollar's down 0.33% versus the Canadian dollar, 133.54. And the Kiwi dollar is up 0.2 at 62.46. So now to the commodities, and we're going to look at the crude oil, WTI crude oil chart. WTI is up 2.6%, not surprisingly. It's trading just below 74. And I wanted to show you this weekly chart here. You can see these actually falling wedges. It's kind of like a fractal system. We had a huge falling wedge long term from the high in 2008, which we broke out of back in 2021 when crude broke around $60 and went up to like 128, and then it dropped. It formed another falling wedge. We broke through that last July around 71 and went up to around 95, and then we come down and we've got another falling wedge here, and it looks like we're breaking out of it. Where are we going to go from there? Well, if you look at the previous falling wedges, when we break out, they've never gone above the previous high. So it could be that crude only goes up to like $90, but we'll have to see. But if it does go up above 95, which was the previous the high from last year, then I think it could be serious, and we could go a lot higher because we'll break that pattern. So that's how I see crude. Just a quick look at the other commodities we usually look at. Platinum, well, that's up just over $2, trading around 921, and high-grade copper is up 0.8 at 382. And we'll finish off with the bond market. The 10-year yield is unchanged at 397. The 2-year as well is at 427. So the curve there is inverted by about 30 basis points. And we're going to keep an eye on that. If that continues to steepen and narrow, I think it's a bad sign for the economy. So with that, I'm going to wish you all a very good rest of the day and a very good weekend. Take care. Bye.